So much is going on right now, whether it's SVB collapsing or a full-blown banking crisis. Everything is relying on the Federal Reserve changing their tune. And that's what we're going to talk about today, that the policy that they've put in place right now, backstopping all the losses for all depositors, no matter how much cash you have, is a disaster waiting to happen. Just imagine the ramifications of one major company going bust. We are in for a world of hurt because the Federal Reserve is now making it their policy that they're going to print to infinity, and that means your currency is being devalued. I want to cover all of that and what it means to you. So let's begin by looking at the stock market, loving it, doing so well as a result of all of this. The Federal Reserve, the Treasury, the FDIC, all coming together and basically saying nobody's going to lose any money ever. If you do something bad, if you do something harmful, if you screw up, we're going to be there to pick you up. You don't need to worry because Daddy Fed is going to be there for you. This is dangerous. I understand as an investor, as a depositor, you want to know that you're protected. But does it make sense to put padding on everything? Does it make sense to wear a helmet in the house on a little kid so that just in case he bumps his head, he's not going to get hurt? Put him in a helmet, send them off. Oh, I'm sure that'll be oh so good for the other students around in class and all the people looking and wondering, why is that boy wrapped up in a bubble? That's what the market is looking like today, and that creates a moral hazard because suddenly that kid doesn't know what it feels like to bang and bump his head. It doesn't know what it feels like to touch the stove. You've got to get burned in order to learn a lesson. And what happens when you don't? You end up doing something so drastic, and it would have been resolved by simply getting burned once in a while so that you know the effects of it. We are basically turning that switch off, and this is a disaster waiting to happen. Watch what happens to the currency as a result of all this. I'm not celebrating it. I am watching it and realize the inevitability of a central bank digital currency. What's that all about? You're going to have to stay tuned this weekend. I've got an entire video breaking down everything to do with central bank digital currencies. Please stay tuned. But I want to show you here, US inflation eases but stays high, putting the Fed in a tough spot. You see, the prices of everything have gone up dramatically, but you don't have to worry too much because the Federal Reserve has done a great job, right? Well, things are changing. Inflation gauge increased 0.4% in February as expected and up 6% from a year ago. Now, the market loved it because it wasn't hotter than expected. It doesn't matter what it is, as long as the expectations are there and they meet those expectations, well, then everything is good. That's the crazy way that the stock market works. But what does it tell us? That prices are still rising. That's right. A drop in energy prices help keep inflation in check, while shelter costs, the thing you can't get around, are increasing sharply. That's right. Energy prices went down. That's great. That's a good thing. However, when you see your house, your rent, all the expenses, my goodness, my gas bill is unbelievable. And I look at that and I had to question it. Why did this go up? Did I really use more energy? And so I compared it to a year ago, year over year increase. I didn't do the calculation, but it was definitely higher for the same usage. And I'm not in Europe, okay? I'm looking at this simple matter of fact that prices have elevated beyond what is reasonable. And we can blame price gouging there and all that. The prices of everything have gone up because the value of the currencies have gone down. That is the underlying and number one reason. Argentina's inflation tops 100% for the first time since 1991. All I wanted to mention was that, hey, at least it's not Argentina. I talked about this years ago, saying, watch what happens to Argentina. And now here we are. Now this is a catastrophic event for them because it's not going to get better. That is going to get worse before it gets better. Okay, look at this at the bottom. It's talking about, inflation and everything that's been happening, but this is the point. The SVB rescue package is essentially a new form of quantitative easing. And that is unfortunate, and it's true. And that brings me to the next section. Mohammed El Arian says unlimited deposit guarantee will be hard to reverse after SVB fallout. Quote, we are now in a different world. And he makes a good point. These two things are connected. What they've now done can't be reversed. So forevermore, we are going to have all deposits. Basically, anytime any company fails, if it's big enough, this is going to be a money printing fiasco. It's going to happen. That's what's occurring. And they'll tell you it's not your taxpayer dollars. Just like they told you that during the TARP bailouts. Oh yeah, GM paid it all back with interest. Don't worry about it. Does anybody really believe all of that? Like you got your money back, you made your money's worth in that? Really? Overall? Maybe there's certain circumstances. But really? Overall? You are going to lose the value on your currency. And who does that hit the most? Middle class and everybody below. That's the way it goes. You are burdened by their actions. Look, Silicon Valley, once the underdog, is now too big to fail. You see? You got to realize this. They're making this too big to fail. And that goes for all of the big corporations, not you. Yeah, sure, they might, take care of your deposits. But in the end, you have to pay. You're the one paying for it. So you are not really, in a sense, you as an individual are getting bailed out. But really what they're trying to do is bail out the corporation, because you could take your money, pull it out of the bank. That would crush the bank. You'd be fine. It crushes the bank. You see what they're trying to do here? They're saying, hey, we're trying to look after you. But really, they're looking after the banks. Credit Suisse shares fall to an all-time low as bank announces it has found material weakness just hours after Wall Street expert predicted that it would be the next to fall after SVB. Now they're talking about Robert Kiyosaki. Doesn't even matter what he had to say. The truth of the matter is Credit Suisse has been hit hard for a while. I've been watching this company fall and fall and fall and fall. It just keeps falling. Every month, it seems like it's lower than where it was before. This is a big one. It's a big deal. Now, I think that there's obviously going to be a bailout for this company. There's not going to be that concern that, okay, it's going to completely collapse. It's going to be terrifying in that respect. But what does this mean? It means the government has to bail it out. And that's a burden for, whatever country, whether it's Credit Suisse, whether it's Deutsche Bank. Every country has their own, big banks that, millions and millions of people will bank with them. You see, everybody's going there. Everybody's using their cards. But yet it has so many troubles, and that goes on behind the scenes. The collapse of SVB is a symptom of something bigger and potentially still more serious in the long term. Central banks have spent 14 years hosing money into the financial system through quantitative easing, which involves buying up, among other things, tens of trillions of dollars worth of government bonds. In doing so, they created a situation where nobody knows exactly what the price to put on most fundamental assets in the market. The supposedly safest assets turned out to be more risky than everyone ever built into a model. They couldn't price this in. Just like back during the housing and financial crisis, they didn't see it coming. How many people said that? Basically everybody. A very small handful of people were mentioning that in 2005, 2006, 2007, a few more people started showing up. Even in 2008, when it was basically fully on, the vast majority of people, all the analysts, all the major corporate, JP, Goldman, everybody else, they were saying that the prices of the stock market would be higher than they were by the end of the year. And that was not even close. Now, what turned it around? Of course, in addition to all the stimulus provided by government, all the different programs, it was the quantitative easing, because they knew devalue the currency, Federal Reserve puts a floor into it, and we see the prices go up. I found it unusual. I saw a lot of comments about this, that people were saying, yeah, who cares about SVB? The stock market is up. But obviously these people aren't aware of how a central bank works, how the monetary system works, and what a financial system actually is. They're probably using a Robinhood account, and they've got their money in there, and they just buy the stocks that their favorite influencer tells them to, and maybe they've gone up in value. And that's okay, but that isn't actual, like an understanding of what's happening within the economy. And if we learn that, even if you're an astute investor in Argentina at 100% inflation rate, if the stock market isn't moving up at that level, which it not necessarily is, you've got a very big problem. Doesn't matter what's going on in your Robinhood account. Do you see what I'm saying? Let's look further. SVB collapse was driven by the first Twitter-fueled bank run. They're trying to put blame that it was all speculation and all these things and that the company was totally fine. But what it doesn't highlight is the fact that how sound is a whole entire financial system when $42 billion can be moved overnight. Cheering Silicon Valley Bank bailout, Gavin Newsom doesn't mention that he's a client. It's interesting the way that this all works, and I only put this in here because it shows us how one bank, who most people didn't even know about, suddenly everybody seemed to be involved in it. Carl Icahn says our economy is breaking because of inflation and poor corporate leadership. I can tell you right now, inflation is a factor, and this is happening all over the place where people are changing their buyer patterns. People are doing things differently now, and inflation has never been able to help the middle class, ever. And I worry significantly about what's going to happen in the coming days, weeks, and months, because what the Federal Reserve has to do right now is they have to, pull back on their talking tough on inflation, and as a result, could in fact create more inflation. The second wave of inflation would hit harder than the first. This is a worry. What do? I talk about it all the time. There's the pillars of prosperity. And essentially, you've got two options, hopefully both, but you can take one or the other if you're interested. One being increase your income. Number two being to basically become more self-sufficient, preparation. In the video, if you type in the pillars of prosperity, the money GPS, I explain that more in depth, okay? Because it's much more complicated than that. And you will learn about that. So pillars of prosperity, something that I don't just have it on the screen for no reason. It's there for people to understand and hopefully will be able to make a better life for themselves. If you appreciate this information, you've got to check me out on the next one. Search the money GPS and you'll get some more details. I'll see you then. Take care.